Welcome you all in this session. Today I am going to discuss the second question of working capital management. But before starting that questions, I must suggest to you people, please follow my previous videos or previous lecture. In that case, the things become easier to understand. First, follow the questions. From the following informations, prepare a statement showing the working capital requirement needed to finance the activity of 5200 units of output per annum. Annual production capacity is 5200 units. We are going to calculate what? A statement showing the working capital, statement of working capital. Look at the structure of the questions. The cost structure, of course. Raw materials is 8, labor is 2, overhead is 6. Total comes to, if you sum up all three, ultimately it is 16 rupees, that is the cost per unit, and profit is 4, then the selling price is how much? 20. This is the structural cost per unit. Now other informations are also available, like raw materials are in stock for 1 month, finished goods are in stock for 6 weeks, credit allowed by creditors 1 month, credit allowed by debtors 2 months, lag in payment of wages half month, lag in payment of overheads 3 months. The production is carried on evenly during the year and wages and overhead accrue similarly. There is a proper meaning of that particular question. I'll come later on for that. Looking into the scenario, as I said earlier, we need to follow a proper statement, and the statement portrayed as current assets. Under current assets, there is raw materials, work in progress, finished goods, debtors, and cash at bank. Under current liabilities, creditors, outstanding wages, and outstanding overhead. As you know, the net working capital considered as the differences between current assets and current liabilities. Now, what is our job? Our job is to calculate each and every components which I portrayed under that particular statement. Now, one by one, as I said, you people, whenever you are going to calculate each and every components, that components will come, that particular figure will come once you multiply three particular items. One is output, another one is time lag, and another one is rate per unit. Once you product these three components, the answer will automatically come. Now we need to at first settle down that output. Look at that. Each and every and lags are given. First one is month, this is half month, 6 weeks, 1 month, 2 month, 1.5 month, 3 months. Few items are given in monthly mode, but although it's my suggestions, since it is 5200 units available to us, you can divide it by 12 months and you can easily manage to solve that. But the things become easier to us if we divide that 5200 units according to the weekly mode, because 52 weeks, if we divide that 52,000 units divide by 52 weeks, it will probably come your weekly output, but things become easier. You are getting a round figure, and that is 100. There is no hard and fast rule. In fact, you can solve this question on monthly basis also, but it is my suggestions, try to calculate the output in easier frame, in easier number. In that case, it will be easy to calculate the remaining figure also. That is why, for easier understanding, I consider that annual output into weekly output to solve this working capital question. Now, weekly output, 5200 units divided by 52 weeks, you are getting 100 units. In fact, there is no hard and fast rule. You can consider the same question monthly based on monthly output also, but in case of weekly output, you are getting probably the easier figure, easier units. Now, one by one, as I said that whenever you are going to calculate each and every components of working capital, it is basically a multiple form of three items: output into time lag into rate per unit. I have already been calculate weekly output. Here we are going to portray our weekly working capital, since I consider regarding that output version weekly. Then it will come weekly working capital. Now it is 100. As I said that these three components we need to multiply. Output is already been settled down. It is 100. Then each and every components must be multiplied by 100. Outstanding wages also 100. outstanding overhead also 100. If you look at that, raw materials multiplying by 100, work in progress I won't multiply. For work in progress we need to follow a separate workings note. As you know, finished goods also multiplying by 100, debtors also multiplying by 100. Cash at bank is generally available to us, normally available to us. Cash at bank we won't calculate under that particular mechanism, that is why I keep it blank. Current liabilities is also multiplying by 100, outstanding wages is also multiplying by 100, outstanding overheads also multiplying by 100. Since I calculate our weekly output is 100 units. Next, multiplying by time lag. In case of time lag, just plot one by one. First, raw materials are in stock on an average for 1 month. Yes, it is given month, but monthly basis, but we consider here weekly basis. Then 1 month we consider here 4 weeks. That is why I am multiplying by 4, since we are going to consider weekly basis of working capital. Materials are in process half months. As I said that work in progress I will come later on. Next, finished goods are in stock 6 weeks. 6 weeks is directly available to us. I just multiply here 6. It is given weekly basis. Credit allowed by creditors 1 month. Credit allowed by creditors, here it is given 1 month. Then it should multiply by 4. 4 weeks I consider. Credit allowed by debtors 2 months. 2 months means how many weeks? 8. It should multiplying by 8. Lag in payment of wages 1.5 month. 1.5 month. Okay, 1.5 month means how many weeks? 1.5 month means how many weeks? 1.5 month means 6 weeks. Then 1.5 months it is. Lag in payment of overhead, it is available 3 weeks. Then 100 should be multiplying by 3. Now each and every output and time lag I have portrayed. Finally it comes to rate per unit. Rate per unit right now we are going to follow. Remember again, two particular things which we still not consider. One is work in progress and another one is cash at bank. First of all, for work in progress, there is a separate mechanism that will follow as a part of another note, and cash at bank is not possible to count in such a manner. For cash at bank, in most of the cases it is directly provided to us. If it is not provided, in that case straightforward we do consider as a nil balance. Now we have to multiply the third components. The third component is rate per unit. One by one. Raw material first. Raw materials, what is the rate of raw materials? 8. We should multiply that by 8. Bracket close. Next, finished goods. As I said that finished goods means total cost of the product. Since it's become finished, it's prepared already, it's already been manufactured, we have to consider the total cost, and the total cost is how much? 16. It should multiplying by 16. Next, debtors, they are our customers. We deal our debtors with which price? With selling price. What is the selling price? Selling price is 20. Now we should multiply that by 20. Cash at bank, I will come later on. I have to follow that either any kinds of hints of cash at bank available or not. It is not available. Now you follow. If you look at the question, there is no hint available for cash at bank. If no hint available for cash at bank, you can straightforward write here as a nil balance. That means you consider there is no cash at bank available at you. After that, creditors. Creditors means our suppliers. Who supply us what? Who supply us raw materials. What is the rate per unit of raw materials? 8. Next, wages. What is the rate per unit of direct labor in your production process? That is 2. Overhead, that is 6. Rate per unit of overhead is 6. It's very easier to calculate the current liability portion. You have to multiply only the cost components. For creditors, it is raw materials. For wages, it is labor cost per unit. For overheads and expenses, whatever it may be, it is overhead cost per unit. Almost we have computed each and every components. Now our job is to plot, to calculate each and every the figure of each and every components. First one is raw materials. It's 100 into 4 into 8. You are getting here 3200. Next one. Finished goods. Work in progress, I will come later on. 100 into 6 is into 16. It is 9600. Next, debtors. 100 into 8 into 20. It is 16,000. 16,000. Next, creditors. Cash at bank is nil, as we consider it is a nil balance. Creditors. It is 3,200. Next, outstanding wages. It is 1,200. And finally, outstanding overheads. 3 into 6 into 100. It is 1,800. Now, almost each and every components we have counted. The final component which is left, that is work in progress. We follow almost the similar process to calculate work in progress. In case of work in progress, we need to consider 3 components as well: raw materials, then wages or labor, and then overheads. These 3 components, one by one, we need to follow, and we have to follow the same mechanism. Output which is already been settled down, 100. For raw materials it is 100, for wages it is 100, for overheads also it is 100. It should multiply by time lag. What is the time lag of overhead available in this question? Follow that. Materials are in process half month. Since we are doing here weekly basis, it should be 2. But we won't write 2 in every cases, because there is a link between that material are in process with that particular line. Here it is mentioned the production is carried on evenly during the year and wages and overhead accrue similarly. The basic meaning of that, whenever it is mentioned carried on evenly during the year, whatever time lag is provided for work in progress, it should be split up between these 2 conversion cost. Raw materials is basically add with conversion cost, and here in this regards you got 2 conversion cost. One is wages, another one is overheads. Now whenever it is given the production is carried on evenly during the year and wages and overhead accrue similarly, the time frame is split up between wages and overhead. We have to consider that such a manner. If the total time is 100%, if we consider the 100% of work in progress time frame, on that 100% work in progress time frame, we consider the 100% we plot materials, but half of that for wages and half of that for overheads. That is why it comes 50% each. That is why I consider, since the entire time frame is split up 50-50, that is why the thumb rule is what? Whatever time lag is provided for work in progress or work in process, that we have to split up between wages and overhead. Then since it is 2, then we have to consider here 1. Don't be panic. If it is 4, then it is 2. If it is 5, then 2.5, 2.5. If it is 3, then 1.5, 1.5. But remember, only when that particular line or that particular information is available with us, only then we apply that particular process. Finally, rate per unit, as simple as that. Raw material is 8, direct labor is 2, and overhead is 6. You calculate here, this is 1600, this is 200, and this is 600. If you sum up, you are getting 1600, 1800, you are getting here as a whole 2400. The total work in progress you got 2400. Plot here now 2400 for better understanding. You can write here note 2. First had already been counted. Now our job is to sum up. Total current assets and total current liabilities. Now you follow here 200, 400, 600, 1200. 4 plus 2 6, 15, 6, 21 plus 2 31,200. 31,200 is our current assets, and current liabilities again it is 1803, it is 6,200. Now if you deduct 31,200, 6,200 from 31,200, you are getting a net figure of how much? 25,000. That is your net working capital.